Hello, my dear friends. Well, I'm here with you to discuss certain interesting topics, especially in our GST as well as customs. We'll discuss some interesting topics which makes a lot of sense both from our examination standpoint as well as from a practical standpoint. Because as you all know, my dear friends, everything we learn, especially in indirect taxes or direct tax, whatever it is, when it comes to tax, the things are really practical. It cannot be something you just learn in the class some point and outside you go in the practical world and you see something else. That can never and never happen because every word and everything what you learn should definitely connect with the practical reality. Only then whatever you learn will make a lot of sense. Agree? So friends, come on. Friends, I'm going to start discussion about a very beautiful topic. It's a small topic, but very interesting topic. So let's spend some good time and discuss that topic. I'm going to talk about a beautiful topic called assessment and audit. Something very interesting and very exciting to learn, assessment and audit. In fact, when it comes to income tax, assessment is a too big concept where you have got something called scrutiny assessment, best judgment assessment, reassessment, income escaping assessment, search assessment, survey, Caesar, whatnot. It's too big. It's an ocean in income tax. But under GST law, the concept is not like that. Under GST law, the concept of assessment is pretty simple and easy to understand. But all said and done, there are some special points what you need to focus upon and have a tremendous clarity of thought. So that special point is what I will definitely focus with you. And almost every time, let me tell you, my dear friends, a question is coming in exam almost every time for about 4 to 6 marks from this particular topic. Where sometimes they ask the question, what are the types of audit? And couple of times question has come, what is the meaning of this provisional assessment? Like that different concepts are there, which we need to learn in detail and understand what exactly happens in this and who is that particular person who will pass the order and how the procedure goes on and how it happens. We need to understand that in detail. So let's spend some really good time to understand this concept of beautiful topic called assessment and audit. Let's start. Come on, friends, let's begin. So, friends, what does the topic mean? The topic deals with a word called assessment and audit. Now, let me tell you in this context, my dear friends, we are going to learn about what is assessment, what is audit, all these interesting points we'll discuss in detail. Friends, let me ask you one straight fundamental question. What does assessment actually mean? Come on, what does your brain tell an assessment I say? Of course, all of us brain tells a similar point that assessment is nothing but basically something like determination of tax liability, examination, checking, verification, all these words we'll use when we talk about the word called assessment. Now, basically, my dear friends, who does an assessment? Assessment is done by basically by assessing officer. But under GST law, we don't use a word called assessing officer, but we have a word called proper officer. I repeat that word one more time, my dear friends. Under GST law, we don't use the word called assessing officer. We use the word called proper officer. In income tax, we always use the word AO. But here we use the word PO. Because the word is not assessing officer, the word is proper officer. Now a big doubt will come. Sir, who is this proper officer? See, basically proper officer is nothing but proper officer generally means commissioner. Proper officer generally means commissioner or any other officer who is assigned that function by commissioner. I repeat the word once again, my dear friends. Proper officer generally means, I repeat that word one more time, my dear friends. Proper officer generally means commissioner or any other officer authorized by the commissioner. That is what is given by the law. In fact, I am not defining that word proper officer. In GST law only, in one section called section 291, they define who is a proper officer. And let me tell you, proper officer means commissioner or any other officer who is assigned that function by commissioner. I hope you are getting clarity, my dear friends. One more time I repeat for the benefit of all my dear friends. Come on. Proper officer means commissioner or any other officer who is assigned that function by commissioner. I hope you are getting clarity, everybody. So make sense, everyone? Come on. Which section defines proper officer? 291 defines who is proper officer. And proper officer means what? Commissioner or any other officer who is assigned that function by the commissioner. That's it. I hope we got clarity, my dear friends. Very good. Now, so basically, when I talk about this word assessment, my dear friends, in assessment, you have got different types of assessment. What we need to learn, we are going to spend some good time on learning something called what is self-assessment. Very interesting word. Then we also have something called provisional assessment. Come on, what assessment, guys? Provisional assessment. What the first word I wrote? Self-assessment. Second word, provisional assessment. Every type of assessment we'll talk in detail. Don't worry. Next. Third one talks about something called scrutiny of returns. I'm sure being a CA finance student, we would have heard this word scrutiny so many times and at so many places too. In fact, especially in income tax, we hear this word scrutiny so much actually. Now, what does scrutiny actually mean? Scrutiny is nothing but verification, examination, which is done by proper officer, as simple as it. But in that, some special points are there which we need to learn in detail. We'll discuss that. Clear my difference? Now, next. So, what the first type of assessment I wrote? Self-assessment. Second one, provisional assessment. Third one, scrutiny of returns. Then, my dear friends, you have an interesting word called BJA, which stands for Best Judgment Assessment. Now, what is the meaning of this word called Best Judgment Assessment? As the name only speaks, it is nothing but best judgment assessment. That is, assessment is done to the best of his judgment. To the best of his judgment. Best of judgment of whom? Proper officer. He will only do assessment. And let me tell you, this best judgment assessment is like a last resort, which is generally implemented by GST department. And this concept is in income tax also. See, basically, when there is no information available, no data available, nothing is there, what will be done by the proper officer? Only thing he will do is best judgment assessment. And why it is called best judgment assessment? Because assessment is being done to the best of his judgment. He will only calculate, he will only decide on estimate basis, random basis. And you cannot ask, how did you arrive? How did you arrive? We can't tell because on some reasonable basis we have done. And we feel that is only best. And that is why it is called best judgment assessment. Getting clarity, my dear friends? And let me tell you, my dear friends, practical case I'll tell you. I've seen one case where in Maharashtra, in Mumbai, there was one samosa vendor. One person was actually selling samosas. This particular person was actually caught one fine day by GST department. This particular man has got turnover of more than 20 lakhs per annum. And in registration chapter, already I taught you that in case of registration is mandatory if aggregate turnover exceeds 20 lakhs, 10 lakhs, and of course we have got special points of 40 lakhs also. But 40 lakhs applies only to some special states, and that too only in case where person is engaged exclusively in supply of goods. Correct, my dear friends? Now I'm talking about a case of samosa vendor. Samosa will not come in goods, it will come in service. So obviously turnover limit is not 40 lakhs, limit is 20 lakhs only. Now this particular person, what has happened? His turnover was more than 20 lakhs, but he did not get registration done, did not pay GST. Because that man is not aware only. That man is not aware that on samosa he has to pay GST. One fine day GST department caught him. GST department caught him and asked him to pay tax. You might get one doubt, sir, how will they catch? How will they catch means they would have got some from their sources information that somebody is doing turnover beyond a threshold limit but not paying tax. In fact, in our area or the colony where we stay, a lot of times we find some chai people, pani puri people, so many people we find who actually do huge turnover. Or dosa people, they actually make huge turnover, but they don't pay tax. Thinking who will come and catch? But on fine day, then they catch, over, gone, finished, story ends there. In the same manner, this samosa person was caught, and GST department asked him, why you are not paying GST? This man humbly replied, sir, I am not paying GST because one samosa, why should I pay GST? Friends, let me tell you, once your turnover cross threshold limit, you should definitely take registration and pay GST. You cannot tell samosa, pani puri, vada pav, dosa, idli, puri and all. You cannot tell all those names. Silently you have to pay GST. And for a simple fact and reason that you have to pay GST unless there's an exemption then. If there's any particular good or service which is exempt, then fine. Don't pay GST. Accepted. Agreed. We will not touch you also. For the reason because we have also got one more special section called section 23, where it talks about persons not liable for registration. Of course, in that one special concept is there which says that any person dealing exclusively in exempt supply is not liable to be registered. Fine. If you apply that concept and tell I will not get registered and not pay GST, that's okay. Absolutely fine, accepted, don't get registration, then don't pay GST. But if you are not an exempted good or exempted service, then how can you tell I will not take registration and not pay GST? Then definitely you have to be registered and you have to pay GST. So one fine day when government catches, they should have a weapon in their hands to catch hold of them. That weapon, what they have, is nothing but best judgment assessment. Very, very powerful concept and very practical too. And this word best judgment assessment is not just in GST. That word is in income tax also. Generally, in any tax law, you will find this word called best judgment because government keeps that point always in the law so that if something is possible, they at least apply the best judgment and tell we are only correct to the best of their judgment. So one special power should be there with them in order to do the assessment, and nothing wrong also because what can they do? See, ultimately they have got evidence that this person is liable to pay tax, but no proper documents, details are available to calculate the tax. Then what can be done? Obviously, they'll go for a best judgment assessment. Now, let me tell you, my dear friends, this is an income tax case, but still I'll tell you, it makes sense actually. You'll enjoy this practical thing. Now, what has happened in income tax? One person was there who was actually a dealer in vada paos. He was selling vada paos basically in Pune. What has happened? This person was almost selling about 400 to 500 vada paos in a single day and making huge profit, huge incomes, but not paying income tax at all. And one fine day, income tax officer caught him. And don't ask again why and how. Please, always remember, don't question the question, only answer the question. Listen, come on. Chalo, what is the interesting point I want to tell you here is, one fine day when income tax department caught him, my dear friends, income tax department could not actually trace the amount of cash and they could not find any documentary evidence. But what income tax department has done is, they went in the evening at 8 o'clock and suddenly caught him. But they could not find the cash there. They could not find the cash. So what do you think they have done? You know, very crazy, very dangerous. These income tax literally went forward and they opened the dustbins and counted number of paper plates in the dustbins and told that time is now 8 o'clock. You started your business in the evening at 5 o'clock. 5 to 8, 3 hours means this much you have done. Generally, you do from 5 to 10. If it is 5 to 10, what would have been the level of business you would have done? Even in this much means morning how much, per day this much means per month how much, per month this much means per annum how much. And on that, your expenses are so much, your profit can be so much. These are estimates. This is not actual. And this is what is assessment we want to do to the best of our judgment. Take this order, pay the tax. Like that, the person was caught. Now you should not get it out. Sir, will open dustbins and check, sir? Yes, sir. Anything they can open and check. They have got the powers of inspection, search and seizure. So don't underestimate them. Any day they can catch. Friends, always keep in mind one point, my dear friends. If somebody is not paying tax, sometimes what happens is, when I sit in my office, some client will come and tell, I'll tell him, boss, you have got so much income, sir. You should pay 1.5 lakh tax. He will tell, why, sir? 50,000 I'll pay. More than that, I'll not pay only. He'll tell. And if I ask him, sir, if you get caught, it will be a problem again. He will tell, sir, who will catch, sir? When they catch, I will see. Like this 100 times, I will tell dialogues. Now, when you listen to the dialogue, what you can tell? You cannot tell any word. You only tell, sir, okay, sir, your wish. Whatever you tell, I'll pay. Ultimately, when you get caught, you told one dialogue. When I get caught, you will see. And when you get caught, nothing to be seen. Ultimately, to pay only. Because what is the choice left once you get caught? Correct, my dear friends? So it's a very practical thing. Don't underestimate that best judgment assessment and all. People just have a thought. Correct, my dear friends? A lot of people do that. Generally, it's always said and done that prepare your journal entries, prepare ledger, prepare trial balance, draw your P&L, draw your balance sheet based on profit in P&L, pay the income tax. This is what is the general thing. But a lot of people practically what they do, you know, first they'll decide this much only tax I will pay. Based on it, they'll recalculate profit and pay. What if one day they get caught? Oh, gone. Completely surround musics will come. Music in terms of tax, interest, penalty, whatnot. Huge effect will be there, my dear friends. Don't underestimate that. So this is like a crazy power what government has got with them, which is nothing but best judgment assessment. Come on. What the first word said? First word talks about self-assessment. Second, provisional assessment. Third one, scrutiny of returns. And let me tell you, in best judgment assessment, my dear friends, there are two types always. The two types are BJA in case of non-filers. BJA in case of what, my dear friends? Non-filers. Second, BJA in case of unregistered person. Now, what is the difference between these two? First point talks about BJA in case of non-filers. What does that BJA for non-filer mean? We are talking about a scenario where officer is doing best judgment assessment for non-filers. Non-filer means what? Somebody who is required to file the return but did not file the return. That is why we call him as non-filers. Somebody who is required to file the return but did not file the return. That is why we call that person as non-filers. Second word is what? BJA for unregistered person. Already I gave an example of samosa, vada pav people and all who are required to get registered but did not take registration at all. So the fundamental difference between these two is that non-filers are those who are actually registered person but are not filing their returns. Unregistered persons are those basically who are required to get registered and pay tax but did not take registration at all. That is what is the difference. Get there. And the reason I wrote separately because both of them are dealt by two different sections. And in that some good concept is there which you need to learn. Finally guys, there is one last thing called summary assessment. Summary assessment. That's it. Come on my dear friends. What are the various types we have? First one, self-assessment. Second, provisional assessment. Third, scrutiny of returns. Fourth, best judgment assessment in case of non-filers, in case of unregistered persons. Other side the word is summary assessment, what I wrote very clearly. Audit, we will talk separately. First, let's become perfect in assessment concepts. Then we will start about audit. No hurry, no tension. Come on, please relax. Relax means don't sit and sleep. Come on, concentrate. Don't sleep. Focus. But relax and listen happily. Concentrate. Come on. So friends, what are the different types of assessment we have? Self-assessment, provisional assessment, scrutiny of returns, best judgment assessment, summary assessment. What is each type and each point we will talk in detail. Get ready. First, before I start, my dear friends, the concept of self-assessment is dealt by section 59. Provisional assessment is dealt by section 60. Scrutiny is dealt by section 61. And best judgment assessment, non-filers is dealt by 62. Unregistered persons is dealt by 63. Summary assessment concept is dealt by 64. And of course, we have got section 65, 66 also, but those sections deals with the concept of audit, not about assessments. So that we will touch separately and later on we'll talk. But first, let's become perfect in this assessment points. So friends, come on. What is 59? 59 deals with what? Self-assessment. 60, provisional assessment. 61, scrutiny of returns. 62, BJA for non-filers. 63, BJA for unregistered persons. 64, summary assessments. So every type of assessment we need to talk in detail. Get ready, my dear friends. Let's start the discussions. Come on. So friends, the first section we are going to talk is what, my dear friends? Section 59. 59 deals with what, my dear friends? 59 talks about something called self-assessment. As the name only speaks, self-assessment. That means we will do assessment on our own self. On our own self. That means what? We will do assessment on our own. Correct, my dear friends? Now, what does that actually mean? Friends, let me tell you. In general, every registered person, I repeat one more time, in general, every registered person should file monthly return in form GSTR 3D. What a lovely word actually. Come on. What is that word, my dear friends? In general, every registered person should file monthly return in a form called GSTR 3D. In that, you will file monthly return. And let me tell you an interesting fact. Why did I use the word in general? That is because composition scheme persons will not pay tax on monthly basis. They'll pay tax on quarterly basis. And of course, there is something called TDS return, TCS return by e-commerce operator. Like that, some special points are there that we will talk separately, that we will discuss separately altogether. That is why I told here, in general. Come on, in general, what is the point, my dear friends? In general, every registered person should file monthly return in which form, sir? In a form called GSTR 3B, they'll file monthly return. Getting clarity, friends? And let me tell you practical point. The practical point, this monthly return is basically, I'll call this as return cum challan. Now, why do I call this return cum challan? Or I'll use a better word actually. I'll use a word called return cum payment. That's a better word actually. Of course, this word return cum payment and all, you will not find anywhere. But I'm telling that I should call this as return cum payment. Now, why am I calling this as return cum payment? I'll tell the reason also why. Because, my dear friends, let me tell you, GSTR 3B is a monthly summary return. And in this monthly return, my dear friends, we will show the details of our outward supplies, and we will also show the details of our inward supplies. Inward supplies in order to claim input tax credit, and outward supplies to calculate output tax. Set off that, pay the balance, and close it. And let me tell you, one very, very fundamental practical point is that we cannot file GSTR 3B without paying the tax. That's impossible, my dear friends. That's the reason, my dear friends, let me tell you one practical point here, that for every registered person in GST portal, which we all know, www.gst.gov.in, when he logs in, he will actually get two ledgers, sir. That is called electronic credit ledger. Other one is called electronic cash ledger. These are the two ledgers given to every registered person online. Now, what happens in these two ledgers? Let me tell you, my dear friends. Electronic credit ledger represents our input tax credits, and cash ledger is what we pay from our pockets. When I say pay from our pocket, it could be paid through NEFT, paid through RTGS, paid through e-payment. There are so many ways for payment and all that we'll talk separately. We have a chapter called Payment of Tax. In that, we'll talk in detail how to pay. That is not our concern now. But one thing I want to tell you is that cash ledger is one such ledger which we'll use for making payments. And cash ledger balance is something like our Paytm balance. Generally in Paytm, what we'll do from our account, we'll transfer money to Paytm account. And from Paytm account, we'll make payment to the other party. As simple as that. Cash ledger also is something like we will deposit money in cash ledger from our bank account, and from cash ledger, we will offset the liability. So, for example, if you have to pay 100 rupees, and if you have got 40 rupees of input tax credit, now balance 60, how you will pay? Definitely balance 60 you will pay using electronic cash ledger. Now, why I'm telling all these things? Because it is a very practical point which you should note in mind and keep in your thought process, that we cannot file GSTR 3B without making payment of tax. That's an important point you need to keep in mind. 3B is not just a return. This is the one such return which cannot be filed without payment. In income tax, at least we can file income tax return without payment of self-assessment tax. Possible, but here it's impossible. That's how they have kept it practically as of now. Of course, government has got plans to change the return formats. They are planning to bring new returns and all that, keeping it separate. But as on today's date, this is what is a return which exists practically. That is GSTR 3B, monthly return what we file. This is not quarterly, this is monthly only. Some students will get some doubt. Sir, some of them will file quarterly basis. No, sir. Sir, the quarterly and all is only for GSTR 1. GSTR 1 is a statement of outward supplies. That is not a return. GSTR 3B is a return. And GSTR 1, we only show statement of outward supplies. And 3B is a monthly return which we show outward, inward, offset the liability, pay the balance, then file the return. Return is not GSTR 1. Return is GSTR 3B. I hope we are clear, friends. Can I proceed? Good. Come on. So what is the self-assessment, my dear friends? Come on, my dear friends. Let me tell you what did Act talk about this word called self-assessment. Come on, please concentrate. Listen. Listen, please focus. Come on. Self-assessment. This section says every registered person shall self-assess. Come on. What is the word I used, my dear friends? Every registered person shall self-assess. Every registered person shall self-assess. Obviously, he will only assess. Every registered person shall self-assess the tax payable by him. Every registered person shall self-assess the tax payable by him for a tax period. Come on, friends. What is the language? Come on, let's look at that. Every registered person shall self-assess the tax payable by him for a tax period. When I say tax period, what does that mean? It's not a tax class. Here, a tax period means month or quarter. Generally, monthly only, quarterly only in case of composition scheme and all. What is composition scheme? We'll talk in detail separately under composition topic, where you have a concept of 1.5 crores, 75 lakhs, a special kind of scheme for those people whose turnover does not exceed 1.5 crore, some cases 75 lakhs and all, where they pay tax at a small percentage. All the special concepts are there in composition scheme. We will talk about it separately. Now listen, every registered person shall self-assess the tax payable by him for a tax period and shall file the return. That's it. This is the only thing you are required to do. Section 59 is a very small section. Not really much of content is there in this, but it's important to know what 59 is talking about. Come on, 59 talks about what? Self-assessment. It says what? Every registered person shall self-assess the tax payable by him for a tax period and shall file the return. Come on. So what is the language, my dear friends? One last time I'll repeat. Every registered person shall self-assess the tax payable by him for a tax period and shall file the return. That's it. This is what is the story of this beautiful section called 59, which talks about self-assessment. Moving forward. Come on, friends. Let's talk about the next interesting issue called section 60. It deals with the concept of provisional assessment. Something super exciting and super awesome actually, and very, 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 very practical too. And I myself have seen a lot of cases where people have gone for provisional assessment. Now, what is this word? Provisional means, provisional is nothing but something which is not final. Obviously, what is provisional? Provisional is nothing but something which is not final. Provisional. Now, why this word provisional assessment will come into picture? Listen. Let's say for a second, my dear friends, there is one person called Mr. Anand, who is a registered person. Good. He is a registered person in Telangana state. Now, this particular person called Anand is a registered person in Telangana state. Now, what happened to this particular person? I'll tell you. This particular person, he is unable to determine, I repeat one more time, my dear friends, unable to what, my dear friends? Determine the value or rate. That means what? He is unable to do valuation. Friends, I already taught you the chapter called valuation. Value of supply is already over. In value of supply, we discussed already a lot of points where I told you about section 15, where value of supply always means transaction value. It refers to price paid or payable when supplier and recipient are not related and the price is sole consideration. And 15.2 talks about inclusions to transaction value. 15.3 talks about exclusions from transaction value. And 15.4 says if transaction value is not acceptable, go to rules. 15.5 for notified supplies will always go to rules. And in rules, we learned from rule 27 to rule 35. Already all the points I taught you. Now, what is that? I am trying to tell you, if a particular person is unable to determine value, he is not able to do valuation properly for whatever reason it is. The reason could be because it is a specialized product and special complications are involved. Subsidies have come, incidental expenses are there, or some other charges are being charged, and is unable to ascertain or unable to exactly understand what to add, what not to add, or is not able to determine value only. So if you remember, I taught you one concept, my dear friends. If you remember, let me make you recollect that concept actually. Rule 27, where consideration is not only in money, where we learn something that first preference we always give it for open market value. If open market value is not possible, what we'll do? Consideration in money plus market value of consideration in kind. If that also fails, we'll follow something called, what my dear friends? Price of goods or services of like, kind and quality. Like, kind and quality, what price is going on, that price will take into account. If that also fails, we look at something called Rule 30, which says take something called 110% of cost. Now friends, if Rule 30 also fails, what is the option left? Rule 31. And what is Rule 31? Rule 31 is nothing but best judgment, where officer will decide what is the value. The reason I made you recollect all these things is to make you understand there can be some practical scenarios where we are unable to determine value, highly possible, or unable to determine the rate of tax. Now, why this situation will come unable to determine rate of tax? Come on, what the first word I use, my dear friends? Unable to determine value or unable to determine rate. Why unable to determine rate? That could be a case where we are dealing in one specialized product, my dear friends. That specialized product, we are not able to understand where do we classify that product. For example, let's say for a second, my dear friends, there is a camera, a motion censored camera. Come on, what camera, my dear friends? Motion censored camera. When I say motion censored camera, what happens? That is basically a camera, but that camera will keep on moving based on person's movement. Correct, my dear friends? Motion sensor camera, we call it. Now, where do we classify that? Obviously, in general, we classify under camera only. We will not classify as sensor, because obviously the main element is camera. Sensor is only an additional benefit given to that camera. That's quite obvious, correct? But imagine one pharmaceutical company has manufactured medicine, and for that medicine, they are unable to figure out the rate of GST. That is because that medicine contains different kinds of formulation, and practically government does not give GST rate for medicine based on the brand of medicine. For Dolo, Crocin, Coldac, Vicks, it's not like that. So it's not about different type or product of medicine will have different rate. It's based on the formula and combination and the products involved, the rate of GST will change. So there could be a case where a person has manufactured a medicine but unable to figure out what is the rate of GST for that particular medicine. So those cases, my dear friends, this particular person can approach for provisional assessment. I hope you understood, my dear friends. Everybody, sir? All of us, please reply. Now, one big point, one big doubt the student can get is something like, sir, where do you go and approach for provisional assessment? Whom do you approach? The doubt can come, obviously. And let me tell you, my dear friends, that application for provisional assessment is to be made online only. We apply for provisional assessment online only. That's very clear. Online, we'll approach to somebody called proper officer. And what will happen now? Proper officer, he may seek some additional documents or additional information, additional document or additional information, because he might require something, no, my dear friends. All of us, yes or no, sir? Then what he'll do after that, PO shall pass provisional assessment order. PO shall pass what order, my dear friends? Provisional assessment order. That means he will decide what is the value or what is the rate on a provisional basis. After that, he will do final assessment also. But I'm talking about a case where now we will do on provisional basis. Come on, my dear friends. PO shall pass what order, sir? Provisional assessment order indicating the value or rate. Indicating the value or rate on provisional basis. Obviously, indicating value or rate on provisional basis only, because we all know the name only speaks the word provisional assessment. And let me tell you one special point here, my dear friends. He'll indicate the value or rate on provisional basis. Apart from that, my dear friends, PO shall specify. Come on, what is that word, sir? PO shall specify the amount. I repeat one more time. PO shall specify what, my dear friends? Amount for which. PO shall specify the amount for which bond is to be executed. Now you might get one doubt, sir, why this word bond has come? Friends, logic is very simple. Provisional assessment is done, but so far final assessment is not done. Provisionally, we might ask him to pay tax of 1 lakh. But tomorrow, when we do final assessment, checking all the documents and verifying everything, that might turn out to 1,60,000 also. But this man might run away by that time. So we want to bind him. And always, my dear friends, in order to bind a person, we'll ask that person to execute a bond. And let me tell you, and also furnish security, my dear friends. And also furnish what, my dear friends? Security. Not exceeding 25% of amount covered under bond. Come on, my dear friends. I'll repeat one more time. What is the language I used? Come on. PO shall specify the amount for which, come on, see that. Focus. PO shall specify the amount for which bond is to be executed and also furnish security not exceeding, what, my dear friends? And also security not exceeding 25%. That word is very interesting actually. Come on, my dear friends, please look at that one more time. PO shall specify the amount for which bond is to be executed and also furnish security not exceeding, what, my dear friends? 25% of the amount covered under bond. Now, what is this word called bond and security, my dear friends? Let me clarify. Sir, when I use the word called bond, what is bond actually? Bond is only a document or agreement what we are signing. That's it. Bond is something like a guaranteed bond. We are executing a bond and telling, don't worry, if tomorrow difference is there, I will pay the difference. 100% I will pay. Like that, we'll sign the bond. But today's date, practical problems are, there is no, what do you call, reliance on bond. There is no reliance on surety somebody is giving. Because today's date, paper does not have value. Value is more given to the securities what people furnish. So, for example, sir, when you go to the bank and take a loan, in bank, can you write one bond telling that if I don't repay the loan, that is my guarantee. I promise, I definitely promise that I'll repay the loan. Give me the money. Will they give? Obviously, no. Because bank also expects you to give security. Bank also will have security, obviously. So in the same way here also they told security to be furnished. And generally what they do is, the security, generally they furnish in the form of bank guarantee. They will not ask a property to be given as security and all. They generally take in the form of bank guarantee. That's what they do. And one point which I want to tell you here is, listen, one point which I want to tell you is, bond is only like a guaranteed document, but security is like giving something which is actually secure. That's why they say secure. Bank guarantee we give. If you don't make the payment tomorrow, they'll enforce the bank guarantee and recover their money. Correct, my friends? Now, interesting point which I want to tell you is that if the bond value is 1 lakh, now you might ask, sir, who will decide bond value? Bond value is obviously decided by proper officer. Already I told you that. Very clearly that PO shall specify the amount. Come on, see that word. PO shall specify the amount. PO shall specify. Come on, see that language, my dear friends. PO shall specify the amount for which bond is to be executed. PO shall specify. And also security to be furnished not exceeding 25% of the amount covered under bond. That means if the bond value is 1 lakh, security can be taken maximum for 25,000. The word clearly given is security to be furnished not exceeding 25%. Security to be furnished not exceeding 25% of the amount covered under the bond. That means security is for maximum 25% of the amount covered under the bond. So if the bond value is 1 lakh, security will be maximum 25,000. I hope you are clear, my dear friends. Speak out. And bond value, who will decide, my dear friends? Proper officer will decide what is the bond value. And whenever you want provisional assessment, my dear friends, we will make an application and definitely you will tell, my dear friend, please execute the bond. Please execute the bond. For what value we will decide. And also give a security. And generally that security will be in the form of bank guarantee. And what is the bond we are trying to tell? That bond is something like a document what we are signing and telling that tomorrow when final assessment is done and final assessment is more than provisional assessment, I guarantee that I will pay. That is like a bond what we are signing. And they also want us to give a security, and security to be furnished not exceeding what, my dear friends? 25% of the amount covered under the bond. This word is very interesting. I hope we are getting full clarity, my dear friends. Can I proceed? Good. Next, my dear friends, story is not over yet. Story is not over yet. We are still in section 60 only. Very, very interesting section, my dear friends. Come on, please concentrate. We have got some good points we need to learn. Listen, focus. What's happening here? Come on. First, what has happened? The registered person will make an application. Registered person will make an application for provisional assessment. Obviously, registered person will make an application for provisional assessment. When application is made for provisional assessment, he will pass the order. And let me tell you one special point, my dear friends, that order will be passed within 90 days. Within 90 days from date of application, he will pass the order. Who will pass the order? Proper officer will pass the order. And in the order, he will specify the value or rate on provisional basis. And he will also specify the amount for which bond is to be executed and the security to be furnished not exceeding 25% of the amount covered under the bond. Correct, my dear friends? Are we clear with this point, everybody? So when you make an application, PO shall pass the order. He will tell what is the value or what is the rate on provisional basis. Clear? And he'll also specify the amount for which bond is to be executed and also the security to be furnished, which will be not exceeding 25% of the amount covered under the bond. So maximum amount of security is 25% of the amount covered under the bond. Clear? Let's proceed. Come on. Next point. So friends, now an interesting point which I want to tell you is that provisional assessment. What assessment? Provisional assessment is done. Provisional assessment is done. Over. Now, after provisional assessment is done, definitely the officer has to do final assessment. Correct, my dear friends? Only provisional is done. Who will decide for a final? That proper officer should tell. Friends, yes or no? Now, with this, my dear friends, let me prepare a small graph kind of diagram here so as to get full clarity. Come on. What will happen first? PO shall pass PA order. What is PA order? PA order is nothing but provisional assessment order. And after that, my dear friends, final assessment. Come on, what assessment? Final assessment order to be passed within 6 months. Very, very interesting word. Final assessment order to be passed within 6 months from provisional assessment order. Final assessment order to be passed within how much time, my dear friends? 6 months from provisional assessment order. And when I say provisional assessment order, within 6 months from date of communication of provisional assessment order. That means when proper officer has given PA provisional assessment order to the particular registered person. Within 6 months, he will pass what order, my dear friends? Final assessment order. I hope we are getting clarity, my dear friends. First, he will pass provisional assessment order. Then final assessment order will be passed within 6 months from the date of communication of provisional assessment order. I hope we are getting clarity, friends. Now, one special point which I'll tell you, my dear friends, which you need to focus upon. This 6 months can be extended. This 6 months can be what, my dear friends? Extended for further period. Come on, I repeat one more time. Can be extended for further period, not exceeding for a further period, not exceeding 6 months by additional or joint commissioner. That means what? Original time limit is 6 months. That means PO should pass final assessment order within 6 months. but the set period of 6 months may be further extended for another maximum 6 months by additional or joint commission. Now you may think, sir, why they extend? Obviously they extend only because PO, the proper officer, could not do final assessment within 6 months for some sufficient reason, for some sufficient cost. Then additional joint commission can extend for a further period not exceeding 6 months. Now story does not end here. Now most dangerous point I'll tell you. Most dangerous point I'll tell you. By commissioner for further maximum 4 years. Now, one part you have to understand. No, don't think that first 6 months, then directly will go to commissioner. No. It's not like that. Original time limit is what? 6 months. That means PO should pass final assessment order within 6 months. But the set period of 6 months can be further extended for 6 months by additional or joint commissioner. Then again it can be further extended for 4 years by commissioner. That's where practically we always say a provisional assessment order can remain provisional only for a maximum period of 5 years. Now, how did this word 5 years come? Obviously 5 years because original time limit is 6 months. Can be extended further 6 months by additional joint commissioner and can be further extended for maximum 4 years by commissioner. I hope we are getting clarity, everybody. Speak out, my dear friends. And whenever he has to do final assessment, my dear friends, just like that he will not do the final assessment. Proper officer will make sure that he will give a notice to the person, he will call for all the records, check all the information, check all the data, and only then he will do final assessment. I hope we are getting clarity, everybody. Very important, friends. Come on, what is the language I am telling? That PA order, provisional assessment order, then they will do final assessment only after verification of all the records. Final assessment will be done only after verification of records and calling for requisite means requisite information. Obviously, my dear friends, he will definitely check all the records, he will definitely call for information, and only then he will pass the order. So basically, proper officer will issue a notice, he will call for information, he will call for records, check everything, only then he will pass final order. Obviously, my reference, the final assessment, how can you pass just like that? Verify everything, check everything, and only then you pass. Are we clear? Come on. Final assessment. What is the time limit, guys? Original time limit, 6 months from date of communication of provisional assessment order. 6 months can be further extended for 6 months. By whom? Additional or joint commissioner. Can be further extended for 4 years. By whom? Commissioner. That's why we always say provisional can be provisional for a maximum period of 5 years. I hope you are getting clarity, everybody. But in exam, I don't want you guys to directly go and write the word 5 years. Don't do that. 1 mark also will not come. Write properly. Original time limit is 6 months. 6 months can be further extended for another maximum 6 months by additional or joint commissioner. Can be further extended for another maximum 4 years by commissioner. Write the word properly, then best marks will come. So it's always important that you keep in mind that we cannot write the paper in whatever manner you want, for the simple reason and fact because our future, our career, or our result, everything is dependent upon the paper what we write. How much ever you know, unless you present properly, best marks will not come. So it's really important that you present in the exam very properly. That's absolutely important. So please make sure that you write properly in the exam. Just don't throw the answer. If you throw the answer, he will not throw the marks. Take my word. Are we clear? Make sense? Can I proceed? Yes. Let me proceed now. Now, story is not over yet, my dear friends. Why story is not over yet? Now, 1 to last points are there in section 60 to learn. And once we learn that, section 60 is over. So let's discuss that and complete the story. Come on, focus here. So friends, now I'll tell you 2 special situations here. Case 1, listen. Case 1, case 2. Now what is case 1, case 2? Case 1, let's say, Provisional assessment, it was told as 1 lakh. That means they told pay 1 lakh provisionally. That is what they told, provisional assessment. Then after that, what has happened? Final assessment, the amount became 1.4 lakhs. That means what? Some certain amount of tax became payable. Certain amount of tax became payable. That situation 1. Now case 2, my dear friends. Provisional assessment order is passed where they told 1 lakh. Final assessment, they told only 80,000. Now what will happen? In case 1, payable becomes 40,000. Case 2, refund becomes 20,000. Crazy point. Interesting point you need to understand. Now what will happen here, which I want to tell you here, listen very clearly, my dear friends. Listen. Now what will happen is, on this 40,000, this 40,000 to be paid along with interest. Along with what, my dear friends? Interest. Very, very interesting point to be noted. And let me tell you, we always pay interest at the rate of 18%. This concept of interest is given by section 50, my dear friends. Let me tell you, this concept of interest is given by section 50, which clearly says, in general, interest rate is 18% per annum. But in case where excess credit is availed, what, my dear friends? Excess credit is availed, or less output tax is shown. You have taken excess credit or you have shown less output tax, then the interest rate is not 18%, the interest rate is 24% per annum. But general case is always 18% per annum. Getting clarity, friends? So what is the interesting point which I want to tell you here now? Come on, that 40,000 whatever is there, that 40,000 to be paid along with interest at what rate? 18% per annum. And the interest will start from when? That is a crazy point. Interest will actually start from 18% per annum from the date the tax was due. From the date the tax was what, my dear friends? Due. From the date the tax was due originally. From the day the tax was due originally till the date of actual payment. Till the date of actual payment. That means we will not see from the date of provisional assessment order. We will not see from the date of final assessment order. We will see from the date when it was originally due. Originally when it was due, we'll see. For example, if it is April month, what is the due date? 20th of May. So we'll calculate interest from 21st May. I hope you are getting clarity, everybody. So it was due at 20th of May. From 21st, interest will start straight away. So they did not use the word interest will start from provisional assessment order, interest will start from final assessment order, all that they did not tell. Interest will be due, interest to be paid from what, sir? From when it was originally due till the date when you have paid. Such a crazy point. Now why I am way too excited? Now why I am excited like this? I'll tell the reason, sir. Other side you see, sir, very dangerous. Come on, provisionally what you have done, sir? 1 lakh. Final what is it? 80,000. Now what is the refund? 20,000. The 20,000 is actually what? Refund. Correct, my dear friends? On this refund, they will pay interest at the rate of 6% per annum. And the story of 6% is actually given by section 56, which talks about interest on refund, which says only 6% per annum. So please observe, when we have to pay to the government, they use what, sir? 18% per annum. But when they are paying to us, they are telling 6% per annum. So about telling, sir, 6%, sir, too much, no, sir, very less, no, sir. Story is not over yet. Listen, one more crazy point to listen. One more crazy point to listen. First, you have to apply for refund. Listen. First, what, sir? Apply for refund. If it's a refund case, then what they told? Apply for refund. Apply for what, sir? Refund. And that refund, they will pay within 60 days. They'll pay within what, my dear friends? 60 days. If not paid within 60 days, come on, I repeat one more time, sir. If not paid within 60 days, interest they will pay at the rate of 6% per annum from 61st today. From which day, sir? 61st today. till date of refund. Till date of what, my dear friends? Refund. Such a crazy point. First of all, you need to observe that they are paying only what percent, sir? 6%. For that 6% also, what they are telling, you apply for refund and we will give you refund within 60 days. For example, my dear friends, if I am the officer, you are the person, I am telling you, you apply for refund. Within 60 days from receipt of your application, I will give you refund. And if I don't give you refund within 60 days, interest will start from 61st day. That means interest will start after 60 days till the date of refund. First of all, 6%. In that also, they are putting this much conditions. Nothing can be done. Nothing can be done. Whatever government is telling, you have to follow. When there is no choice, what is the option left? Accept it. That's all. Sir, I hope we are getting clarity, everybody. Speak out. So, friends, in case we have to pay, what you should do? You will pay along with interest at 18% per annum from the date when it was originally due till the date of actual payment. But it's a refund. You apply. They will give that refund within 60 days. If they don't give that refund within 60 days, they'll pay interest also at 6% per annum. And that interest will start from 61st day till the date of refund. That's it. Finally, friends, one last point to tell you in this section 60. With that, I'll complete the story for friends. So if you remember, in 60, starting I told one word called, whenever you want provisional assessment, you will basically execute one bond. Remember that? And along with bond, you'll also do security, no sir? Now, my dear friends, the security what you have given, you should definitely get it released, no sir? Now, what will happen? After final assessment order, come on, what is that word, my dear friends? After final assessment order, person can apply for release of security. Person can apply for what, my dear friends? Release of security. Obviously. And PO shall release. Obviously, what PO also will do with that? PO shall what, my dear friends? Release within 7 working days from receipt of application. PO shall release within 7 working days from receipt of application. He'll release. And straight away he will not release. Obviously, he will release only after ensuring that whatever amount is due to the government that has been paid. Only after whatever has to be paid to the government that is paid, he will release. Obviously, fundamental common sense that he will release only after whatever is due to the government is being paid. Quite obvious. Are we clear with this, friends? That's it. That's the end of story for this provisional assessment. So, friends, what we have done so far, sir? We have done section 59, which talks about what? Self-assessment. Every registered person shall self-assess the tax payable for a tax period and shall file the return under section 39. And let me tell you, return is given by section 39. 59 is self-assessment. Return is 39. Come on. 60 is what? Provisional assessment. If a particular person is unable to determine, the value or rate, he can make an application for provisional assessment. Then a proper officer will pass order within 90 days. After that, he will pass final order within 6 months. 6 months further extended by 6 months by additional or joint commissioner, and can be further extended for 4 years by commissioner. So provisional can be provisional for a maximum period of 5 years. And after final assessment, my dear friends, there could be a case where amount is payable or amount is refundable. If amount is payable, pay that along with interest at the rate of 18% per annum from the date it was originally due till the actual date of payment. But in case of refund, you apply for refund, they'll give the refund within 60 days. If they don't give it in 60 days, interest will start after 60 days at 6% per annum. After 60 days till the date of refund. Then finally, one last point I told you was, after final order is passed, you can make application for release of security and they release within 7 working days after ensuring that whatever is due to the government that has been paid. That's it. That's the story of section 60. Very important, very practical. And also came in exam 2 couple of times. Clear? So friends, come on, let's get back. So friends, what does section 59 deals with? Section 59 deals with the concept of self-assessment, where we discuss very clearly that every registered person shall self-assess the tax payable by him for a tax period and shall file the return under section 39. 39 talks about return, 59 talks about self-assessment. Come on. What does section 60 talk about? 60 talks about what, my dear friends? Scrutiny of returns, where we clearly discuss what is, section 60 talks about what, my dear friends? 60 talks about provisional assessment, where we discuss very clearly that provisional assessment, when we apply, they'll pass the order within 90 days. After, they'll pass final order within 6 months from date of communication of provisional assessment order. 6 months can be further extended maximum by another 6 months by additional or joint commissioner. Can be further extended for another maximum 4 years by commissioner. That is what is the interesting points we had in section 60, which talks about provisional assessment. Now let's talk about section 61. That is what I was recollecting again and again. That is about scrutiny of returns, obviously. Come on. 59 was what, my dear friends? Self-assessment. 60, provisional assessment. And 61 talks about, let me tell you, scrutiny of returns. Friends, as the name only speaks, what does scrutiny mean? Scrutiny is basically nothing but verification or examination, obviously. So basically what happens is, the registered person, he files what? Returns. These returns are basically scrutinized. Straight fundamental fact is very clear that returns, whatever we file, are scrutinized. Now, a doubt can come to a student brain, sir, whose all returns they'll scrutinize? It's not specifically mandated in the law that if turnover is more than 20 crores, we will check everything. Turnover less than 20 crores, we will check half. Like that, nothing is there in the law. Nothing is there in the law. Where proper officer, he can randomly select any return and he can start scrutinizing. And practically they'll have tools and softwares where they'll select based on some filters what they'll keep. Something like excess credit is being availed, or somebody has reduced their output tax. Last month, current month, there is a huge variation. Like that, they put filters and they select a person. And when they select, they'll start scrutinizing the contents of the return. Now, my dear friends, now one interesting point is that whenever they scrutinize the contents of the return, there is a high possibility that proper officer might find some discrepancy. Come on, proper officer might find some what, my dear friends? Discrepancy. Now, what does discrepancy mean? Discrepancy is nothing but a variation which is being found on scrutinizing the return. That means when return is being found, he found some variation. Maybe the details are not disclosed correctly, or last month, this month, there is a huge variation. He found some discrepancy, or he found some variation. Then what will happen? Automatically, what will happen? PO shall issue a notice. PO shall issue a notice. An interesting point is that in Act, they did not specify so far what is the time limit for issuing notice. That is not specified in the law so far. As to what is the time limit within which notice is given by proper officer. That is not given anywhere in the law. But what I want to tell you is that PO shall issue a notice and grant maximum 30 days time. Grant what, my dear friends? Maximum 30 days time to reply. Come on, my dear friends, very interesting point. What will happen basically? PO, he will scrutinize the return, and if he finds some discrepancy, he'll issue a notice and he'll grant maximum 30 days time. And always, I hope you know that this 30 days time is always from date of service of notice. This 30 days time is always from date of service of notice. Now, what difference it might make when you say issuing notice, serving notice? There's a difference. Because, for example, let's say on 10th October, proper officer passed or issued the notice, but the registered person or the receiver received the notice on 14th October. Then the time limit of 30 days will not start from 10th October, it will start from 14th October. Obviously, for a fundamental fact and reason that 30 days time we will see from date of service of notice or not from date of issue of notice. So generally he will give a notice and he'll grant maximum 30 days time to reply, or he might extend 30 days also. That's also possible. Are we getting clarity, my dear friends? So he'll issue a notice, and now after issuing notice, there are two possibilities, my dear friends. Now what are the two possibilities? Listen. Whenever notice is served, there are two possibilities, my dear friends. Now, what are the two possibilities? Number one, person accepted the discrepancy. Obviously, highly possible that he might accept the discrepancy, telling, yes, sir, I made a mistake. There is my default. I paid less tax. I taken more credit, or whatever case it is. Correct, my dear friends? And accepted the discrepancy and he paid the amount. Obviously, when you accept the discrepancy, pay the amount. Pay the amount, my dear friends. No doubt about it. When you accepted the discrepancy, please pay the amount. Please pay the amount and inform the proper officer. Obviously, that is what we will do. When you accept the discrepancy, telling that, yes, sir, I made a mistake, accept it, pay the amount, inform to the officer. There ends the story. Other case, there is a possibility that person submitted explanation. Person submitted what, my dear friends? Explanation for non-acceptance of discrepancy. This word is very interesting. Person submitted what, my dear friends? Explanation for non-acceptance. Person submitted explanation for non-acceptance of discrepancy. That means what? He is not accepting discrepancy, telling that I'm not okay with this. This is not correct. This is not correct. And he'll submit explanation. And obviously, he'll submit explanation with how many days? 30 days. Because generally, the officer gives 30 days maximum. And within that 30 days, this person can either accept the discrepancy, or he might submit explanation telling that I'm not okay with this. I'm not accepting this. Clear, my difference? Now, what will happen is that one special point I will tell you. Listen very clearly, sir. Listen, come on. If explanation, come on, what is that word I am telling, sir? If explanation furnished is not acceptable to proper officer. Come on, what is that word, sir? If explanation furnished is not acceptable to proper officer, then what will happen? Then PO takes. What will happen? Obviously, come on. What will PO takes? PO takes corrective measures. Sir, when explanation is given by the person, there can be a case where proper officer has accepted explanation. If it is accepted, then no further course of action. But if it is not acceptable, only then PO will take corrective measures. PO will take what, my difference? Corrective measures. And what will take corrective measures? That is, PO can take action. PO can take what, my difference? Action under section 65 or 66 or 67 or 73 or 74. Now, what are the sections that you should know very clearly? Now, 65 talks about something called department audit. Audit by department, which we'll talk in detail. What is this department audit? Where department also conducts audits. And there's something called 66, which talks about special audit. I'll discuss with you in detail what is the difference between department audit and special audit. But just to highlight you, what are the differences is that 65 is a case where department officer will come and conduct the audit. 66 is a case where special audit, where they'll appoint one chartered accountant or cost accountant, and that chartered accountant or cost accountant will come and conduct the audits. That is where it is called special audit. We'll talk in detail, don't worry. 67 talks about something called inspection, search, and seizure. Obviously, he will take such action. He has got that power very clearly. Now, dangerous words called 73, 74. What is this word 73, 74? 73 deals with a case of other than FMS. 74 talks about FMS. What is FMS? FMS talks about fraud, misstatement, and suppression. 73 will come into picture in case where there is no fraud, misstatement, suppression. 74 will come into case where there is a fraud, misstatement, suppression. But why this 73, 74 will come into picture? That's important, which you need to understand. 73, 74 talks basically about tax which is not paid or tax which is short paid. Come on, what is that language, my dear friends? Tax not paid or short paid or ITC wrongly availed or utilized. Come on, what's that language, my dear friends? ITC wrongly availed or utilized or excess refund claims. Or excess, what my dear friends? Refund claimed. Or refund basically wrongfully claimed. That is what is the meaning. So basically what is that word we are talking about, my dear friends? Tax not paid or short paid or ITC wrongly availed or utilized or excess refund claim or refund claim wrongfully or refund claim, what my dear friends? Wrongfully. In those cases, we'll apply section 73 or 74. In that some detailed procedure is there, how they will go for this demand and recovery, which we'll talk in a chapter called demand and recovery, where basically they'll recover the tax not paid, short paid, or ITC wrongly availed or wrongly utilized or refund wrongfully claimed. So basically, this particular section is a very small section. What it talks about is basically section 61, which deals with the concept of scrutiny of returns, which tells us very clearly that whenever they want to scrutinize, my dear friends, they'll issue a notice. And when they issue notice, we have got maximum 30 days time to reply and maximum 30 days time to reply. And this 30 days, we will see from date of service of notice. That word is very important, which you should definitely keep in mind. So maximum 30 days time to reply and 30 days is from date of service of notice. That's very important, which I really want you to keep in mind. And once 30 days time is given to reply, my dear friends, and generally whenever they give a notice, they'll highlight the discrepancy and they'll give a notice. There is situation 1, you might accept the discrepancy and make the payment of tax. Situation 2, you might submit explanation telling that we are not okay with the discrepancy. And if explanation is given, that explanation may be acceptable to the proper officer or proper officer is not happy with the explanation. If proper officer is happy with the explanation, there ends the story. But if proper officer is not convinced with the explanation given, he might take action under section 65 or 66 or 67 or 73 or 74. Wherein 65 talks about audit by department, 66 talks about what, my dear friends? Special audit. 67 talks about inspection, search and seizure. And 73 talks about what, my dear friends? Recovery in case of other than fraud, misstatement, suppression. And 74 talks about recovery in case of fraud, misstatement, suppression. That's it. That is the story of section 61, scrutiny of returns. Come on, friends. Section 59 talks about self-assessment. 60 talks about scrutiny of returns. 59 talks about self-assessment, 60 talks about provisional assessment, 61 talks about scrutiny of returns. Come on, friends. One last time. What is 59? Self-assessment. 60, provisional assessment. 61, scrutiny of returns. I'm pretty sure we are clear with all these points. So, friends, 59 deals with what? 59 talks about self-assessment, 60 provisional assessment, 61 scrutiny of returns. These 3 sections we are done. Let's move forward and talk about next section called section 62, which talks about BJA for non-filers. BJA for what, my dear friends? Non-filers. Something really interesting section actually, which makes a lot of sense. So let me tell you, as I told you already very clearly that in general, we have got one section called section 39, which talks about returns. And these returns are generally filed on monthly basis, or certain special cases we have a concept of quarterly basis also. Correct, my dear friends? Generally it is monthly basis, GST 3B and all, quarterly for composition scheme. Like that, some concept is there. Correct, my dear friends? Now, other interesting point is, we have got one section called section 45, which deals with a brilliant concept called final return. Friends, let me tell you, there is something called annual return and there is something called final return. Annual return is different, final return is different. Now, what is the point? Sir, annual return is one such return which is to be filed by every registered person on annual basis on or before 31st December of next financial year. They file the annual return, for which we have got a form called GSTR 9 and all. Like that, we have got a form for annual return. Now, what is this final return? Final return is one such form which we file in form called GSTR 10. And let me tell you, this final return is a return which is filed only by those persons whose registration is cancelled. And final return is to be filed within 3 months. I repeat one more time. Final return is filed within 3 months from date of cancellation or within 3 months from date of order of cancellation. Final return is filed in a form called GSTR 10. Now, why did I suddenly talk about this word called return under 39 or return under 45? There is one reason, my dear friends. Let me tell you what is the reason why I suddenly started discussion about this monthly return, quarterly return, final return and all. Generally, what happens is, let's say for a second, if a particular registered person fails to furnish, come on, if a particular registered person fails to furnish return under section 39 or return under section 45. What is 39? 39 is nothing but the monthly return or quarterly return what you are required to file. Or section 45 talks about what return? Final return. Now what am I telling now? If any particular registered person fails to furnish return under section 39 or return under section 45. Now what happens is PO issues notice. PO issues what, my dear friends? Notice under section 46. Under section 46, there is one concept which says that if any particular person fails to furnish return, then PO will issue a notice telling that please file the return, and they will grant maximum 15 days time. So basically, you need to understand in simple terms what's happening here is that if any particular person, registered person, fails to furnish return under section 39 or 45, proper officer will issue a notice under section 46. In fact, practically, my dear friends, we have got one form called GSTR 3A. In that form, proper officer issues notice telling that, my dear friend, kindly please file the return. Please file the return, and will grant maximum 15 days time to file the return. Now, why I told all this point? Listen, if the person fails to furnish, I repeat one more time, if the person, what my dear friends, fails to furnish within 15 days, within what my dear friends, 15 days, then PO shall proceed for what, my dear friends? Best judgment assessment under section 62. To make you understand this, I told you all that story. So what is that point, my dear friends? Section 62. First point you need to understand is that if a registered person fails to furnish return under section 39 or under section 45, proper officer issues notice under section 46 and he grants 15 days time to file all the returns. And if the return is not filed, then PO shall proceed for best judgment assessment. Best judgment assessment basically means he'll calculate what is the tax payable based on information, whatever is available with him. Obviously, that is why it is called best judgment assessment. That is the only reason why it is called best judgment assessment, where assessment is done to the best of his judgment. I hope we are clear with this, my dear friends. Now, in this context, one special point I'll tell you is that BJ order, this has got maximum time limit, my dear friends. And the maximum time limit to pass BJ order, they kept huge time with them, my dear friends. And the maximum time limit is 5 years. 5 years from due date of furnishing annual return. From due date of furnishing what return, my dear friends? Annual return. For example, my dear friends, for example, for financial year 1890, the due date of annual return is 31st. For due date of annual return is 31st December 2019 in general as per law. Of course, practically the due date keeps extending and all, that is a different story, but in general 31st December 2019. From there you have got time limit of 5 years. That means you have got time till 31st December 2024. That means for financial year 18-19, proper officer can pass order on or before 31st December 2024. Huge time they kept with them because they want to do best judgment assessment. So friends, what is the time limit for passing order? Time limit for passing order is 5 years from due date of furnishing annual return. I hope you are getting clarity, friends. Now, one point I'll tell you is that BJ order will be passed by proper officer, and summary of that order, come on, what is that language, my dear friends? Summary of that order is uploaded electronically. Summary of that order is uploaded what, my dear friends? Electronically. The details are uploaded online by the proper officer. Online where? Online is nothing but gst.gov.in. In that portal, that common portal, everything is done by proper officer and by the registered person. That means what I'm trying to tell you, proper officer will pass best judgment order, and the summary of that order he'll upload electronically. I hope you are getting clarity, friends. Come on. So what is the time limit to pass BJ order? The time limit to pass BJ order is nothing but 5 years from due date of furnishing annual return. Very, very interesting point and very important. Are we clear, friends? And finally, one last special point to tell in section 62. Then 62 is over. Small section, but very important. That is, my dear friends, listen. Order passed. Correct? Order passed. What order? BJ order is passed. And that order is served. Served means what? That served means that order, whatever is passed, is given to the registered person. Correct, my dear friends? Now, in this context, one special point what they told is that if the person, if what, my dear friends? Come on, if the person, when I say person, what person? Registered person, obviously. If the registered person, what, my dear friends? Registered person furnishes a valid return. If the registered person furnishes a valid return, within 30 days, within how many days, my dear friends? 30 days of service of BJ order. Within 30 days of service of BJ order. Come on, friends. What is the language I'm trying to tell you? Within 30 days of service of BJ order, then the order, then what, my dear friends? Order shall be deemed to be withdrawn. Then the order shall be deemed to be withdrawn. Very, 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 very interesting point, and of course, very, very important too. Come on, what is the language, my dear friends? If the registered person furnishes a valid return within 30 days of service of BJ order, then the order shall be deemed to be withdrawn. Order shall be deemed to be withdrawn. Very, very interesting word. Order shall be deemed to be withdrawn. That means after the BJ order is passed, within 30 days, if you file all the pending returns within 30 days of service of assessment order, 30 days is not from issuing order, 30 days is from service of assessment order. If you file all the valid returns, then what will happen, my dear friends? The order shall be deemed to be withdrawn. In exam and time, question has come for 2 marks. Can the BJ order be withdrawn? Highly possible. The BJ order can be withdrawn provided within 30 days of service of order, you file all the valid returns. But one point, let me tell you, my dear friends, even though they withdraw the order, the liability for interest and late fees will continue. That means even though order is withdrawn, you still have to pay interest and late fees. So I repeat that word once again, my dear friends. Even though, come on, what is the language I'm telling, my dear friends? Even though, come on, please look at that. Concentrate, my dear friends, please focus. What is the language I'm telling? Even though order is withdrawn, liability for interest and late fees shall continue. Interest and late fees shall what, my dear friends? Continue. Very, very interesting point. Come on. What is the language, my dear friends? Even though order is withdrawn, the liability for interest and late fees shall definitely continue. That means just because order is withdrawn, don't think that interest and late fees is waived. That will definitely continue. So friends, finally to conclude this concept, what is the whole story here? If the registered person furnishes a valid return within 30 days of service of BJA order, then the order shall be deemed to be withdrawn. And even though it is withdrawn, the liability for interest and late fees will definitely continue. And one point, let me tell you to conclude this, is that when I use the word valid return, what is valid return? Valid return is nothing but file the return and pay the tax. Obviously, if you just file the return without paying tax, it is not called valid return. And of course, my dear friends, as on today's date, practically it is not possible to file the return without paying the tax. That's not possible at all. So it's very important that you pay the tax, only then you can file the return. Because starting of this class only, I told you that GST or 3B is a return cum payment. You cannot file 3B without paying. I'm sure this makes sense, everybody, sir? Fantastic. That's the end of story for this beautiful section called 62, which talks about BJA for non-filers. Very, very interesting, small section, but very interesting. In the same lines, my dear friends, you have got one more section called 63, which talks about BJA for unregistered person. This is also very interesting, friends. BJA for what, my dear friends? Unregistered person. Now, one point I want to tell you here is that, very clearly is that, sir, please understand very clearly that 62 was for BJA for non-filers. 63 is for what? BJA for unregistered. That means what? We are talking about a case where any person fails to obtain registration. Even though liable for registration. That means even though his turnover is more than threshold, he did not take registration. Correct, my dear friends? That's one possibility. Or a case where, or second case also I'll tell. Registration is cancelled suo motu by proper officer. And I don't think I need to tell you that point, why registration will be cancelled suo motu by proper officer. Already I taught you, my dear friends. In case of cancellation, wherein in registration chapter, I taught you that section 29 talks about cancellation of registration suo motu by proper officer, where proper officer can cancel the registration suo motu in case where a registered person has contravened any provision, or in case where he has not furnished returns continuously for 6 months, or a composition person continuously for 3 consecutive periods, or any case where a person has obtained voluntary registration but did not commence a business within 6 months, or registration is obtained by way of fraud, misstatement, suppression and all. Already I taught you that point in registration chapter. Correct, my dear friends? So in these two cases, what will happen, my dear friends? In these two cases, if person is liable to pay any amount, then PO shall proceed for best judgment assessment. So friends, section 63 BJ for unregistered person will come into picture only in two cases. One, any person liable to be registered but did not obtain registration. Second, registration is cancelled suo motu by proper officer. Registration is cancelled suo motu by whom, sir? Proper officer. In that case, the proper officer, what will happen, my dear friends? He will go for best judgment assessment. And one special point you need to note in this context is that whenever he want to do best judgment assessment, my dear friends, what PO will do is, PO first, he shall issue notice Obviously, he shall issue notice and grant 15 days time to reply. And whenever I say days and all, wherever in GST law you find the word days, it means working days only, friends. Because Saturday, Sunday is always off and all. That's why we always say working days and all. So he'll issue notice and grant 15 days time to reply. Correct, my dear friends? Only then PO shall pass order. And same like last section, summary of order is uploaded electronically. Summary of order is what, my dear friends? Uploaded electronically. That is what you need to understand. Getting clarity, my dear friends? And always keep in mind, no BJ order can be passed. No BJ order can be passed without giving OBH. In full form, it means opportunity of being heard. You would have heard that word a lot of times, my dear friends. That technically we call it as opportunity of being heard, which is technically called principles of natural justice. It's always important that you give an opportunity of being heard. Clear, my dear friends? And finally, last point, same like last section, time limit. And time limit is, my dear friends, 5 years. 5 years from due date of furnishing. Come on. 5 years from due date of furnishing. What, my dear friends? Annual return. 5 years from due date of furnishing annual return for financial year to which non-payment of tax relates. Financial year to which non-payment of tax relates. So you please basically see to which year does this tax pertains. To which year does this tax pertains, and that year's annual return date you see, annual return due date you will see, and from there you will have a time of 5 years. This 5 years point is same like section 62 where we learnt about BJA for non-filers. 63 talks about BJA for unregistered persons. So friends, finally what we have done so far, friends? So far we completed the story of section 59, which deals with the concept of self-assessment. 60 provisional assessment, 61 scrutiny of returns, 62 is what, my difference? 62 talks about BJA for non-filers, 63 talks about BJA for unregistered persons. I'm pretty sure we are clear with all these points, my dear friends. Very, very important, and it makes a lot of sense too. Are we clear? Everybody, come on, one more time. What is 59? Self-assessment. 60, provisional assessment. 61, scrutiny of returns. 62, BJA for non-filers. 63, BJA for unregistered person. Finally, friends, one last section in assessments, section 64. Audit, I did not start so far. Audit will start separately. Come on. 64 deals with one interesting concept called summary assessment. Name only speaks summary assessment. Very interesting, my dear friends. Very, very interesting word, summary assessment. Now, what is the meaning of this word called summary assessment? So, name only says summary. That means in summary manner, they will pass the assessment order. Now, why they will do that? Generally, they do this in case where there is a possibility that a person is running away. Or they feel that delay in passing order would be prejudicial to the interest of revenue. And in this context, one point I'll tell you, my dear friends, first fundamental point, summary assessment is initiated only with previous permission. Summary assessment is initiated only with previous permission of additional or joint commissioner. This word is very, very important. High possibility a question can come in exam for multiple choice question or a straightforward question. It's important, sir. So multiple choice questions, MCQs will come in exam for 30 marks. We all know that. And a lot of people have a thought process, MCQ, I'll take one MCQ book, 1000 MCQs will study. I'll also give an MCQ book. But its MCQs are not those, you'll mug up some 100, 500 MCQs and go to the exam. It's not like that. Multiple choice question also is given by concept. Case study based MCQs they'll give. One situation they'll give. On the situation they'll ask multiple choice questions. For which clarity of thought on concept is very important. Come on, listen. Summary assessment initiated only with prior permission of what, my dear friends? Additional or joint commissioner. And let me tell you, summary assessment is done. Come on. What is a brilliant word, my dear friends? Come on, let me repeat the point. Summary assessment is done. Come on, kindly please concentrate, my dear friends. Please focus. Summary assessment is done only when summary assessment is done only when PO has evidence. Summary assessment is done only when PO has evidence that a person is liable to pay an amount. Come on, friends. What is this word, sir? What is this word, sir? Summary assessment is done only when PO has evidence that person is liable to pay an amount. And delay in passing order, and delay in passing what, my dear friends? Order is prejudicial. Prejudicial to interest of revenue. Very, very interesting word actually. Come on, friends. I'll repeat now. What is word, my dear friends? Come on. Summary assessment order is one such thing where summary assessment is done only with prior permission of additional or joint commissioner. And when will they do this? They basically do only when proper officer has got evidence with him that a particular person is liable to pay an amount. An amount is nothing but some tax. He is liable to pay some tax. And proper officer has got reason with him. Proper officer has got sufficient reason with him that delay in passing the order will affect the revenue. That means if you delay the passing of order, that person might go or revenue might get affected. High possibility. I hope we are getting clarity, my dear friends. Everybody, sir. And next point, let me tell you, my dear friends, very clearly I'll tell you. Listen, please. Summary. First of all, it's a summary only. Summary assessment order and summary thereof. Summary assessment order and summary thereof. When I say summary assessment order and summary thereof means what? Summary of summary assessment order. Summary assessment order and summary thereof shall be uploaded electronically. Shall be uploaded what, my dear friends? Electronically. And obviously they'll upload electronically where, my dear friends? On the common portal. Straight away. Clear, my dear friends? Finally, 1-2 points, interesting points, which you need to know in this section, my dear friends. And if you know that, that story is done. Listen. If liability pertains to goods, if liability pertains to what, my dear friends? Goods. What does it mean now? For example, sir, Mr. X is liable to pay some amount in relation to goods. Clear, my dear friends? And what is happening is that now the goods are in warehouse. The goods are in warehouse, and this is maintained by the goods of X. The goods of X are in warehouse, which is maintained by Mr. Y. Now, what law is telling is that if the liability pertains to goods and if X is not ascertainable, that means what? If the taxable person to whom the liability pertains is not ascertainable. If the person to whom the liability pertains is not ascertainable, then the person in charge. I repeat that word, my dear friends. If the person to whom the liability pertains is not ascertainable, if the person to whom the liability pertains is not ascertainable, then the person in charge of the goods is deemed to be a taxable person. Then the person in charge of the goods shall be deemed to be taxable person. That means government will catch hold of the person in charge, and from him they will recover the amount due. Now you might get one doubt. Sir, why will pay? Why will not pay from pocket? From the goods only will pay. That means they'll take control of the goods and they'll recover the money. So the only thing they're trying to tell is that in case liability pertains to the goods and the person in charge and the person in charge of the goods shall be caught. And he will be caught only in case where the person to whom the liability pertains is not ascertainable. What can government do, sir? Sir, for example, there are some goods on which liability is there and liability is not being paid, and we are unable to trace the actual owner. We are unable to trace the actual owner. Then what we'll do? The person in charge shall be deemed to be the taxable person, and he will be liable to pay the amount. I hope we are getting clarity, friends. So speak out. Fantastic. Finally, guys, one last point. Withdrawal of summary order. Very interesting, guys. Withdrawal of summary order. So let me tell you, summary order, whatever is passed, is withdrawn in two cases, my dear friends. What are the two cases? Number one, application filed by taxable person. Application filed by taxable person within 30 days of receipt of order. Within 30 days of what, my dear friends? Receipt of order. Within 30 days of receipt of order, the taxable person may make an application telling that, sir, I want to withdraw the order. Within 30 days of receipt of order, he can make an application. Second situation, suo motu. Suo motu. Suo motu means what? On his own. On his own, he can withdraw. If he finds that order is erroneous, he can withdraw the order. Correct, my dear friends? I hope you are getting clarity. Finds that order is erroneous, and he can initiate section 73 or 74. Already you know what is 73, 74. 73 is recovery in case of other than fraud, misstatement, suppression. 74 in case of fraud, misstatement, suppression. Already I taught you that concept, my dear friends. Are we getting clarity, my dear friends? And let me tell you one important point. Who will withdraw? That point obviously is very obvious, that is withdrawn by additional or joint commissioner. So summary assessment order may be withdrawn. Summary assessment order may be withdrawn by additional or joint commissioner in two cases. One, application is filed by the taxable person within 30 days of receipt of order. Second situation, suo motu on his own, if he finds that order is erroneous, and he can initiate section 73 or 74. That means he will follow the procedure given in 73 or 74. 73 is other than FMS, 74 is FMS. We'll talk in detail about 73, 74 in the chapter called Demands and Recovery. Don't worry. Are we clear, friends? That's the end of story for summary assessment. Very interesting, very important. I hope we are clear, friends. So, friends, finally, what is section 59? Self-assessment. 60, provisional assessment. 61, scrutiny of returns. 62, BJA for non-filers. 63, BJA for unregistered persons. 64, summary assessment. That's all. This is a story of assessments what we have. And of course, in this topic, we need to talk about audit also. That also we'll talk separately now. Are we clear so far, friends? Yeah, makes sense.